Welcome to this week's special presentation titled A Day in the Life of a Successful Investor. My name is Todd Shaffer, Manager of Research for VectorVest. I'll be your presenter this evening. VectorVest advocates investors use a rules-based approach to manage their portfolios. Of course, there are a million ways to construct a trading plan. We thought it might be helpful to demonstrate how a successful investor approach can work particularly in these troubled times. So come along and I'll show you how we're managing our successful investor portfolio and share some guidance for current market conditions. I suppose before I demonstrate the system, I should tell you what it is. Recognize we're time limited, so I can't give you all the details, just the highlights. This graphic is designed to give you an overview of the successful investor system and how it works. The outer ring is indicating that it all starts by establishing your goals, the techniques you want to use, and the mindset you have for your trading plan. Our goals for the successful investor portfolio are to outperform the market, historically about 10 to 15% annually, position trade with high VST stocks using the VectorVest simple approach, and we want to have a calm and confident mindset making end-of-day decisions that only require about 10 minutes a night. So under that overview, we move to the inner circle, these pie pieces, for the details of when to buy, what to buy, and when to sell. For the when to buy piece of our rule set, we're going to use the green light buyer. For the what to buy, we're going to favor safe, undervalued stocks rising in price. Top VST, top Midas Touch, or stocks from your favorite prudent search. More important than how you found them, we want all of our stocks to demonstrate persistently rising price and earnings patterns. We only enter the trades if the market and the stock continue to follow through the following trading session, and will mitigate our risk by only buying one or two stocks on each signal. This protects us against loading up the portfolio on what could be the last green light. For when to sell, we're going to use the VectorVest stop price. We'll lock in gains as soon as reasonably possible to avoid watching a winner turn into a loser. Once we build a 10% gain, we won't give back more than half of that gain. And finally, we'll tighten stops when the market trend turns against us. So recognize all trading systems will follow this construction, but may have differing details. When the market's falling, and for us that means when we're in a confirmed down situation and are getting red lights in the price column of the color guard, we tighten our stops on our long positions and we start shorting stocks with falling price and earnings or by contra ETF. We use a 20-day moving average as a stop on these short positions and the same rules to lock in gains as quickly as possible. We mitigate risk by only buying one or two stocks on each signal, and this protects us against loading up the portfolio in what could be the last red light. So those are the core trading system rules. We manage a paper portfolio to demonstrate to our students and coaching clients the practical application of the successful investor techniques and rule set. I want to show it to you for the same reason, not to make a performance claim, but to illustrate that you can safely and steadily grow your portfolio without taking unnecessary risk and with the confidence of knowing when to buy and sell. I pinky swear. So let's take a look at the portfolio. From the program, I'll go up to the Portfolios tab. Here's the portfolio for our Successful Investing Coaching Group. This is how it's played out over the last year. We take a very risk-averse approach to demonstrate that you don't have to be aggressive to get acceptable results. We started this portfolio with our coaching clients in November of last year. Let's see what we can learn. It's currently up just under 11%. We pulled back from our high of about 13%. Our biggest drawdown for the year was 3.64%. So nothing, of course, goes straight up. It ebbs and flows. But the key is we have a persistently rising equity curve in the portfolio. These flat spots, or nearly flat spots, are where we were in cash or had very few positions, which means very little risk exposure to the market. Most recently, we moved to cash when all of our short positions stopped out on the current rally. The green light was slow to come, but we followed the rules and took these two positions, which are currently open in the portfolio, and we're having mixed results, one up and one down. I have stops in place that limit my risk on these trades to about 1% of my portfolio value using the VectorVest stop price. If the market pulls back, my portfolio drops 2%. Assuming they pull back all the way to that initial stop loss. If the market pulls back and gets a red light, I'll tighten my stops and mitigate those losses. Now let's look under the hood. I'm going to open the reports button and let's look at this summary report of how this portfolio has performed. Overall, we've made 47 closed trades. At that pace, that's less than one trade per week. This is not very active trading. Now, presumably, if you have the skill set, you can improve on this performance by taking more trades. But the key for me as a coach is to remind you that trading frequency does not determine success. Of those 47 trades, we had 30 winners and 17 losers, for a 63% winning trade percentage. Our long campaigns have had 59% winners, and our short campaigns have had 68% winners. So pretty evenly distributed, although the short positions have performed a little bit better. That doesn't surprise me in this market we've been in for the past year. But below we see the best and worst trades for the year, but for me, the more important factor is our average winner is about 1.6 times the average loser. And that means we have a positive expectancy. The average winner is bigger than the average loser, and we're winning more than 50% of the time. This system will make money over time. Too many of us think that success in the markets comes from being right more often than we're wrong, and this pushes us to predict outcomes. Well, I'd submit to you that success comes from being on the right side of probabilities over time, not being right or wrong. We come off the rails when we override probabilities with our predictions. Well, why would we do that? Well, greed, fear, ego, to name a few. VectorVest was created to help stock investors make better, more informed investment decisions, cutting through all the noise with factual data and analysis so we can get on the right side of probability. At every decision point in our trading system, we're stacking probabilities in our favor. So if we're following this technique, what should we be doing now? Well, let's take a look. By the way, of course, I don't have enough time to cover all the details. I just want to give you a sense for how it works. Let's move into the program and let's start my day as a successful investor. The process starts after the markets close at any time it's convenient to you. But we suggest you make this process part of your daily routine. And that process starts with market timing, and so it starts on the home page of VectorVest. With market timing, the probability of our being on the right side of the market move is dramatically improved. Our current market timing signal is neutral. We see that here in the market timing gauge. The color guard square below gives us more context to that current condition. Our market timing signal is determined by the color of the data cell under price at the top of the color guard. So the current market is neutral. Our timing signal, which is the price light, is yellow. So I'm going to sit on my hands. I don't need to do anything, right? We're not buying. The color guard gives us the context so we can see that we've transitioned out of some red lights into green lights, right? Still a majority of yellow lights, but we now have a bullish bias on this transitioning market. Today was simply dissipation of that strengthening trend. But it's not a downtrend, so let's just hold pat and see where we go from here. Well, if I get a green light next, well, then I'll look for high VST candidates with rising price and earnings to buy on follow-through of that green light. If I get a red light, since I'm already in a confirmed down call, I'll tighten my stops and open bearish positions on follow-through. Nothing more to do but to manage the trades I'm in. My risk of a catastrophic reversal is mitigated by my risk controls on the stock trade. Nothing more to do but to manage the trades I'm in. So let's go to the portfolio. Here are the two trades, and let's look at their graph. Let's look at a 3-month window. Once I'm in the stock, I'm managing completely on price. My stop loss vehicle is the VectorVest stop price. When I entered the trade, the value of that VectorVest stop price was 383.72. So my stop for Lulu is at 383.72. I'm interested in moving that stop higher as soon as I can without truncating the natural movement of the price of the stock. So until I make that adjustment, price can move between this range, which gives it plenty of room to breathe, as we like to say. If the price advances, once I get to about 10%, then I'll lock in half of my gain. As the trade progresses, if the stop price comes up above my initial line in the sand value, it becomes a mental stop, and I'll trade it that way. And I'll make adjustments on that basis. But right now, no adjustments are needed. So let's take a look at our second stock. Uber moved higher today, although it's not up to that 10% threshold. My line in the sand stays fixed at its initial value of 46.55. Gives the stock plenty of room to breathe. The VectorVest stop price is moving above my line in the sand stop, but it's a mental stop, and so no adjustments are necessary. And that's it. That's my routine. 10 minutes. I'm done. No anxiety because the Lulu trade is down 3%. My stops are in place. My maximum risk is determined by my stop loss. Log off and enjoy life. And that's what we've been doing for the past year. And in hindsight, we've met all of our performance goals, taking advantage of the opportunities the market offers us. So if you get nothing else from this presentation, understand that your system determines your success by putting probabilities on your side. Now, there are a gazillion ways to make money in the markets. Whatever approach you choose, you need a system that stacks those probabilities in your favor and tells you when to buy, what to buy, and when to sell. Each component needs to complement and balance the other components. So how does your trading system stack up? Here's a quick test to help you make that assessment. Does your market timing signal reliably tell you that the market is in an uptrend? Are you finding safe stocks that are rising in price with rising earnings? How long does it take you? And more importantly, do you feel that it takes too long or maybe not long enough? My experience is if it's taking too long, we tend to use shortcuts that shortcut the effectiveness of our trading system. Do you know how to use stop prices? Are your stops helping you protect profits and minimize losses? So take an inventory of your trading system. If you'd like to learn more, then I invite you to join us for our live coaching sessions on Thursdays. If you have VectorVest Premium, you already have access through the university. Whether you have access or not, I would also suggest that you watch the Quick Start course on the training tab in the program to get started. A successful investor is confident and self-sufficient. It's been our mission for some 40 years to help our clients achieve this vision of success. Thanks for watching.